Hi, Martin Turner here. This week we have our third lecture on understanding the past. We review key concepts from weeks 1 to 6. We review what our firm does and its strategy. We also review the economic profit framework and the key accounting drivers of return on equity and return on net operating assets. We also see the videos available on Moodle that provide key content for our unit. And we look at the video key accounting drivers. And first, we start with a review of what each of our firms does. All right, well, welcome everyone. This is week 6, we're halfway through the term. And what we'll do today is we're going to review what we've looked at in the first 6 weeks. And it's going to be very interactive. We'll ask lots of questions and discuss. I expect we'll spend about 50 minutes in the lecture today, and then we'll have time to, and we can keep working online actually for a while on it, and then we'll have time in the tutorials to wrap up any issues we have with our restatements and so forth. So if you're not on Echo 360, if you could be on Echo 360, there'll be lots of questions. Now, so we're going to summarise, we're going to have a look through what we've done so far, and then we'll look forward to the next 6 weeks. And but before we do that, here's your first question. Have you studied Act 11059, Accounting, Learning and Online Communication? Have you studied this unit before? Yes or no? You can also put maybe if you're not sure. Got 2 yeses. Two yes, 1 no. I think there's more than 3. Yeah, I know there's more than 3. We've talked to everyone. Well, Maria Tyler will be taking a lecture in Act 11059 this term tomorrow morning. But if you studied it before, if you're not on Echo 360, just hop on Echo 360. There's going to be a lot of other questions, so this is an easy one, just yes or no. Or if you're not sure, you can say maybe.
I'm just struggling to find the slide. There it is.
I'd find the slide, it's right down near the back.
Got it.
Right down near the back. 3-1. Sharon managed to reach it. There are more than 4 people here, so I'll just wait. If you just open up the slides, go right through to near the end, or sort of 60 or 70% of the way through. So 3 said yes, 1 said no. Maria, has Hannah and Mackay answered the question? Oh, yes, right. Oh, no, still at 3-1. Hannah.
We're having a bit of trouble loading it, actually, loading the slides up this morning.
Oh, okay. If you do have trouble, has anyone else had trouble loading up the slides?
I only had trouble because it's not in week 6, it's still under week 5,
Yeah.
if that helps.
You can go to, it says weeks 5 to 6 slides. They're on both weeks 5 and 6, actually. You can click on either link, they'll be the same. Is that what you meant? We covered all this. We covered all the material of weeks 5 and 6 in week 5 that we were going up to until we got to this point of looking back through the last 6 weeks. 5 and 2, it's sounding a little bit more like everyone. Yvette, have you been able to get on all right?
Yeah, I did work it out, but I went through Echo 360, not the Moodle page.
What did you say, Yvette?
I found them, but I went through the Echo 360 page, not the Moodle page, to find them.
Yeah, so there might have been a problem with the link in Moodle, is there? Has anyone else had trouble getting the link on Moodle? You can go through Echo 360 and go through the section page.
Hi Martin, we had problems in Brisbane, but we found it on slide number 39.
Yeah.
Oh, yeah, you just had trouble finding the slide.
Yeah.
So we've got 6 yeses and 3 nos. That's 9. Is there anyone left? There's 3 on Zoom. And we've got 4 in Brisbane now. Hello, Brisbane. So answer the question, get onto the slides. 4 in Brisbane, 3 on Zoom, so that's 7. 1 in Mackay, 1 in Rockhampton, and 1 in Cairns, that's 10. And we might be getting a few more coming in a bit late. So I think, has everybody answered it in Queensland, in Brisbane? Brisbane, have you answered this question?
Yes. Yeah. Yes, Martin. Yeah.
All 4. And what did you say? Did you say yes or no?
Yes. 1
He
yes,
said-
3 no's.
1 yes and 3 no's.
Yeah.
So you're all our no's
Yeah.
are in Brisbane.
There you go.
Who has done it in Brisbane? Who's done that subject in Brisbane?
Me.
Sorry, who are you there?
Maria.
Nadia?
Maria.
Maria?
Yeah.
Maria? Sorry, it's a little bit hard to see. That's great. And that means everybody else has done it, is that right? I'm glad no one said maybe if you weren't too sure. Now, if you did study it before, what was the most important thing you learned in that unit? Or anything that you learned in the unit? That's for those 7 people who did their unit before. What was the most important thing you learned? And you can say absolutely nothing, or you can say what you like. Maria, can you see the answers coming up?
Yes.
And there's 2. So we need 7. Well, Maria, you might like to discuss what people are saying, but we'll just give them a few more minutes, another minute. Still got 2. 2. I know there's 7 of you, so... Have you answered this one, Sharon? Sharon's still working on it. She's trying to think, what was it? It was so many years ago. Sharon did it quite a lot of years ago. You can say absolutely nothing. Can't remember. We've got 3 responses. You can put whatever you like down. Who answered it? Look, Lois is helping Maria in Brisbane. Justin, have you answered this question up in Cairns?
No, I haven't. I'm sorry. I've been just talking with.
You've been talking
With,
to Karen.
About the my company and just reflecting about what we're doing about in the past.
That's all right. Have a crack at answering this question. It's fine to be talking to Karen. That's excellent. And a big focus of today will be wrapping up our assignment, so getting through those things. Okay. And we'll be discussing some of that. So we've got 6. So I think we're just waiting on Justin. Maria, do you want to take us through the answers of these?
Sure. So my list is slightly, when I look at my slides, it's slightly in a different order to yours. So if I go in a different order, that's why. Students have said that they recall a different way of looking at the financial statements in terms of operating and financial activities, which is good because that's what we had to do again in our unit. Repetition assists with learning. That Peerwise is a great learning tool, and it certainly is. And there's a lot of good questions that you can generate for Peerwise directly from the study guide each week. How to differentiate between operating and financing activities. So again, something that we a concept that we continue with in our unit. The importance of actually learning and how to learn than just remembering what the concepts are, which is really good. It's your learning journey, and that's what we always reinforced between the unit right from ACCT 11059 through to our unit now, ACCT 13017, and including our introductory financial accounting unit, which is 11081. So we really try to get you to focus on making the learning journey personal rather than just rote memorising certain concepts, which means in the long run you'll probably forget it. Okay, one person remembers, well, says that the most important thing that they learnt was how to write a blog and peer review others' work. I'm glad about the blog thing. I didn't think I'd see that one written there. So that's good. Writing a blog is one form. It's a very popular form, actually, of communication online. And peer reviewing others' work, which is a key concept that assists you with your learning journey each term. So that's a very good thing to have learnt from 11059, and hopefully reinforced again in our subsequent 2 units that continue on from 11059. How to restate financial statements, because that was an important thing to learn, and we repeat it again in this unit. So how to restate our financial statements. And again, this links back to the other comments about being able to differentiate between the operating and financing activity, as well as looking at the financial statements in terms of operating and financial activities. And the last comment I have here is that the most important thing they learned was the basics of accounting. But tell me what the basics of accounting are. What's the basics of accounting?
Sharon will answer that question. Perhaps the fundamental accounting equation?
Yes, that's exactly what I was thinking.
And what's that? What is the fundamental accounting equation?
Revenue plus equity equals assets plus expenses plus something else. I can't remember.
Almost. So you did the extended
Something like that.
accounting equation.
You got 4. You got 4 out of
You've
there.
got 4 of them.
The liabilities.
Liability.
Does anyone else want to have a crack?
Assets minus liability.
Hannah, do you want to tell us the fundamental accounting equation?
Assets equals liability. Wait, plus equity. Yeah, assets plus equity equals liability.
Just say that one more time.
Assets equals liabilities plus equity.
Did you say assets plus expenses? No.
No, she's just doing the fundamental accounting equation.
Oh, which is what? Assets equals...
Liabilities plus equity.
Yeah, that's right. That's the fundamental accounting equation. And what's the... And that's the 3 elements of accounting. There's as at a certain date, aren't they? But there are 2 other elements of accounting, aren't there? What's the extended fundamental accounting equation? Hannah, you're on a roll, so what's the extended... You know, that has all 5 elements. What's that one? Hannah's gone quiet. Does anyone else want to throw... Justin in Cairns, what's the extended fundamental accounting equation?
What is it? Assets minus expenses. Is it plus expenses?
You're telling me, Justin.
Yeah, no, I'm just trying to. It's been so long since you used it. So yeah, assets plus expenses equals revenue plus equity and plus liabilities.
Yeah, that's right. The fundamental, in the extended fundamental accounting equation, those 5 elements of accounting, that's one of the things we looked at in the Act 11059 is the foundation subject for the degree, and we're now in the foundation, we're now in the capstone unit at the other end. Yeah, that's the business model. That's the business model underlying accounting. And accounting only looks at those 5 things. There's nothing else. All the other things that happen with a business, accounting doesn't look at. it just looks at those 5 elements. So quite a few years ago, I was teaching in New Zealand for a few years, and we used to have study groups, and students would name them, and then I'd get I would get a student from who'd graduated from. I remember I got one student who was from EY, and I would just email them and say, look, can you just, I'll give them the 3 top names, can you pick the one that's going to win the competition for naming the study groups? And so one of the groups called themselves the 5 Elements. And so this past student, she got some of her colleagues at EY, they'd been working there for a couple of years, to come up with their choice. And they decided not to pick 5 elements because they were joking to themselves because none of them could remember what they were. So, if you don't know the 5 elements and the fundamental accounting equation, you don't understand too much about accounting. And so that's a very simple. So we started with that model, for example, and went on. So that was one of the things that somebody mentioned that they learnt, was the fundamentals of accounting. And that would be one of the elements. We went through quite a lot of other things. So a capstone unit gives you the opportunity to reflect on what you actually learnt. It's not so much a question of memorising something like the fundamental accounting equation or the extended fundamental accounting equation. It's just that if you understand how accounting is put together, that's just a description of the model. And whereas if you're just trying to memorise something that doesn't mean anything or very little to you, some people are good at that, but most people aren't. So that was good. One person talked about how we learn. You see, we talked about that at the beginning of the degree, 11059, because quite a lot of people think of learning as just a quantitative increase in knowledge. And we saw in that first, in 11059, we asked people what they think learning is at the beginning. And around, over half, and usually quite a bit more than half, can be 3/4, think that's what it is. And learning is that. It is a quantitative increase in knowledge, but it can be so much more than that. Other people thought of it then too. The second most popular way of thinking of learning was, yes, that's a quantitative increase in knowledge, but it also includes applying it, say, at work, in a job. But again, quite a simplistic view of what learning is. It's sort of like I'm just going to get a few skills or kit bag of stuff which I could help me with a job. Most people, by the time they got to the end of the degree, have probably thrown that one away. They think, uni's not really giving me sort of little skills that I can use in a job. But it can be, of course, and it should be, but often people feel that isn't what they're getting out of it. And they just fall into this sort of regurgitate and forget sort of pattern. And I remember one lecturer, he's a well-known professor in accounting, and very prolific in research. Having dinner with one evening a few years ago, he was telling me how all his students vacuum clean their brains after each subject, and then he teaches them again and they've forgotten everything they did last term. And we've probably seen a little bit of that just now. As you're thinking back to previous subjects, this is just one you might have done just a few years ago. What can I remember? Operating and financial, that's another distinction. We're looking at that. The reason we looked at it years ago in the beginning of the unit was to help us be introduced to financial statements. And that was by having to decide whether it was operating or financial and separating them up, that supported us to look at each item in the financial statements of our firm and have a bit of a feeling of what each item was. Now at the end of our degree, when we're doing it, you get the chance to reflect on whether you know more about what all these different items are than you did at the beginning. And quite a few people have commented that they do feel a bit more comfortable. It's when they're first starting, it was all just, they didn't have a clue. Now they've got, some people have got quite a good idea on certain items. And you can also reflect on, for example, you would have studied how to account for plant and equipment, and property, plant and equipment, and in intermediate financial accounting. And so you could reflect now when you're looking at your financial statements. You could say, yeah, I recall how we account for them in the different ways. And you can look through footnotes of your firm to see how they're accounting for them. property, plant and equipment is usually a fairly big item for a lot of firms. And then the idea of peer review and use of blogs, sharing draft work and commenting on other people's work can be a very powerful way of learning. So somebody might have had that experience. And that is relevant in a lot of situations. Anyway, that's what we've done here. For those who haven't done it to 11059, there's a bit of catch up on getting through this part of the unit. And we're very happy to support you. Lois will no doubt support you in Brisbane to work through this first assignment. But now that we go forwards, we've just been getting our company ready. We're going to be looking into forecasting and looking at the future, which is what we're interested in business and investing. So we'll go back to the slide. So we're going to summarise what we've been looking at up to weeks 1 to 6. The first thing we looked at, one of the first things we looked at was to identify what our firm does. Ryman Healthcare, it's a property development company. It develops retirement villages, and aged care centres and nursing homes, and also dementia hospitals. And in fact, it invests $500 million in property development every year. So it's a major property developer, but it doesn't sell any of them. It keeps them all. It's like lifelong leases for life. It just sells occupancy rights. And so it's ending up owning a whole heap of retirement villages and aged care centres everywhere in Australia and in Victoria. And in the reading I go into a great deal about what it does. So what I'd like to do now, the next question is, what does your firm do? Just write very briefly your understanding of what your firm does. Maybe what it doesn't do as well. Like Ryman Healthcare doesn't sell retirement villages. But, so what does it do? And for example, Ryman Healthcare describes itself as a care company, so it fundamentally cares for older people. And it manages these retirement villages and nursing homes and so forth. So what have we got? What does your firm do? We've got 3. Everybody's got a firm. We've got Chan here now, so we've got at least 11 people. What does your firm do? Yvette, have you answered the question yet?
Yeah, I think mine was like the first one.
Oh, you did the first one. Well done, Yvette.
Yep. I try to stay on the ball.
I like the word try. Try to stay on the ball. That's excellent. You're probably working on the next question as we speak. 1, 2, 3, 4, 5, 6. 6 responses. We'll just wait for the other 4. We've got 7. Just waiting for 3 more. You guys answered? You answered? You're still answering? Yeah. You've answered? It looks like you've answered. Yep. 1, 2, 3, 4, 5, 6, 7, 8. We're waiting for 2 more people. What does your firm do? Just while we're waiting for the other 2, Yvette, what does your firm do?
My firm does a lot. Mine is the one that does underwater mining, makes submarines, does nuclear power, weapons and defence, engineering. It also does a bit of transport and stuff like that. It's pretty broad.
What do you mean it does nuclear power? What does that mean?
I think it actually has nuclear power plants.
You
My
think?
company, well, it's set off, like it's not an Australian company. It's actually based in London, but it has a lot of other companies across the globe. So I think it has nuclear power plants in countries where it's legal. Like, I don't think we do it in Australia yet.
Well, it's legal generally, but we don't have any. That's right.
No.
But you said that's a bit vague, isn't it? You think they own nuclear power stations? But you
They own
think,
subsidiaries that own nuclear power stations.
well, that's the same thing if it's part of the group. So the company. Let's hope management know what they own. Let's say they've got some power stations, and in what country?
I haven't actually been able to work out exactly what country it has them in. They just say that they have them.
All right. And what's their main activity?
Mining,
Mining. And do they mine things, or what do they do?
like offshore rigging.
What? They mine offshore rigging.
Like, I'm not a... What's the term called when you mine oil under the ocean?
Drilling.
Drilling.
Yeah, you know those dirty big floating things, and then they have a drill down, and they can be quite deep. What do they actually drill oil themselves for themselves?
I think they sell the equipment to other companies that operate it.
Well, that's quite important. That's quite different to doing it yourself. What's the name of your company?
James Fisher and Sons.
James Fisher and Sons. So James has probably moved on, and his son's running it, or is somebody else running it?
I don't think anyone Fisher is actually running it. They might own parts of it, but the CEO was not a Fisher.
Okay, it's a big company. So you're thinking that it's like a mining. It's like it builds. I think what you're saying is it builds oil rigs and drills and sells them to mining companies, or delivers them to them. Is that what it does?
It does a lot. It does. It also does things like diving. So I think they actually have divers that go down and work on the drill underwater. So they do a bit of both. They do a bit of engineering and designing. They do a bit of engineering and designing and selling, but then I think they also operate on these drills with the people they sell it to.
Yeah, so they might do maintenance and repair work and all that stuff. We had a student, actually in 11059, I think it was, who was involved in that activity on the Tasman Sea while studying. And it was this ship boat, and he was diving, and they were doing various things with drills. Anyway, you can see how you need to be very clear on what your firm does. How are you going to be able to forecast your firm if you're not sure what it actually does? So what you need to do is have a bit of a think about what its main activities are, and specifically what they are. And so if you do a little bit more think, it might do a whole lot of other things, that might have a lot of smaller activities too, but particularly its key activities, because you're going to have to think about what's driving your firm's financial performance in the past, and how you're going to figure that out if you're unclear about exactly what it does. But what about Sarah? Sarah in WA, what does your firm do?
So my firm's an airline service originally based in France, but it's recently partnered up with a Dutch airline service. So it's basically European based in total now. And obviously it provides flight services for around Europe and to a couple of other countries. They've just added some new flights to America.
What's flight services? What does that mean?
They run airplanes to allow people generally how do I describe this? Okay, so technically it's commercial, but it's aimed at the whole world for holiday flights. So they let people board their planes and then they fly them to holiday destinations.
It sounds like an airline.
It is. I said it's an airline service.
Oh, it's an airline. What's the name of the company?
Air France KLM.
Air France KLM.
KLM.
Oh, so this is a dirty big airline. Yeah, we know what airlines do, don't we? They own lots of planes. Do they own their planes, or do they lease them?
Own.
Own?
Wow.
Yeah.
You sure?
Well, according to their reports, especially since they added that they're looking to buy new planes this year.
Okay. Yeah, I suppose they do own them in that sense. That's how they fund them, I suppose. So they've got a whole heap of planes. How many planes have they got?
I couldn't find a specific number when I was looking through their reports,
Okay.
which was
And
a
I
bit
think-
odd.
I think I read recently that Air France is retiring all its A380s.
Yes, it is. It is, and that's why I said they're buying new planes. They're retiring all their old ones, and they're looking to buy new planes.
Yeah, smaller ones, you know, for the 777s or the A350s or something like that. Yeah, the poor old A380, it seems to have had its day, doesn't it? Everybody loves the A380 as a passenger, but they haven't worked out commercially too well. Okay, that's good. So you've got an airline and you've got a feel. And where is it based? Where's its head office?
France.
Paris, is it?
Well, Paris, yeah.
Oh, okay.
Capital of the world.
May be able to do a little tour to Air France, eh? What about in Brisbane? Leo, what's your firm? What does it do? What's its name and what does it do?
There you go.
My company name is GOD. It's Australian companies, and they provide some water to the farmer or the urban area, such as the pump or something.
Such as a pump. Yep. So it's GUD Holdings, and they provide water to farmers and irrigation with pumps.
Oh, do they sell the pumps? They don't provide the water, do they?
No, that's right. Yeah, no, they provide the irrigation facilities. Yep.
Oh, okay. And and they're an Australian company. They just sell in Australia.
I'm not sure, but almost the customer is Australian farmers.
Right. And is that sort of like cotton farmers and all these sort of people who do a lot of irrigation? Is that the sort of thing?
Yeah.
Yeah.
Got a bit more to investigate, don't we?
Oh, it's all right. You've got a bit of a feel. And particularly if they're just based in Australia, servicing Australian, and it's mainly farmers, you're getting a bit of a sense of where it is. And there's a whole lot of issues around the water industry, isn't there? So that's interesting. Maria, do you want to just take me through the responses of everyone? Just very briefly,
Sure. I'll just quickly get out of Zoom.
Oh, you're into Zoom. That could be very bad.
Right, so I shouldn't have any feedback. Okay, so people's firms do a wide variety of things. One sells, makes and does research and develops vehicles. Another firm makes equipment for underwater mining submarines. So I think that one was Yvette's.
Yeah.
We've discussed that one a little bit. My firm is an airline service provider, so they arrange flights around Europe and from Europe to other countries in the world. It provides flight services as opposed to selling the planes themselves. That sounds a bit like Hannah's company.
Well, that's Air France, I think, KLM.
Oh, okay, so there's a couple.
Sarah's. Yeah.
Okay, Sarah's company, all right. Hannah's is also to do with, but it's German, isn't it? Russian. It's Russian. There you go. So we have another airline service.
You've got a Russian airline. Have you got Aeroflot, have you?
Yeah, she does.
Yeah, they had a terrible safety record there, didn't they?
I noticed that, yeah.
Hopefully that's improved a bit. Okay, well, that'll be interesting.
Yeah.
So you and Sarah are in the same industry. Sorry, keep going, Mary.
That's all right. We've got Brilliance Auto, which has partnerships with BMW and Renault, which manufactures cars and minibuses and parts of cars for China. I think a lot of car companies tend to do that too. So that's fairly interesting. I'd be interested if that was my
Oh,
firm.
who's got Brilliant Company? Who's got that one? Who's got that? No one's owning up. But there's some very big car companies who produce cars in China. So this is probably one of those.
Sorry, Martin. Maria in Brisbane has that one.
Oh, do you? And where is it based? Where does it make? Does it make cars?
Yes, it manufactured cars with BMW and minibuses with Rivian.
And whereabouts does it make cars?
Which country?
Yeah, which
China.
country?
In China.
In China?
Yeah.
Probably down south. It's a bit like, you know, has built a brand new, they call them gigafactories, Tesla, in China as well. So, yeah, China makes a lot of cars. And so, all right, that's interesting. That's very interesting. I'll keep going, Maria.
Yeah, I think it would be an interesting company. Then we've got Hannah's company, which is Aeroflot, which leases planes and provides services as well. They're the largest airline in Russia, she tells me. Got a few transportation companies. Another company provides long-distance air travel for passengers, cargo and freight safely, reliably and with excellent customer service.
Well, that can't be Aeroflot, can it?
No.
So that's a third airline.
Yeah.
Is that a Chinese one, is it?
Yes.
Is that yours, isn't it?
Yes.
Oh, what's the name of that one?
Southern China.
Southern China Air is, they've got 3 big airlines in China. That's one of them, yeah.
And I've flown with them and they were all right. So
Are they all right?
Yeah, yeah.
Yeah, they're big.
Yeah, I went to Beijing and within China with their airlines. So there you go. Security with 2 main areas. They supply more traditional services such as personnel and CCTV monitoring, as well as cash management services such as collecting cash from businesses and refilling ATMs. Wow, okay, that's a security company.
Yeah, we see them going around filling up those ATMs, don't you?
Yeah.
Oh, that's good. Yep, that's clear. Yeah, I think that's pretty clear what that firm's doing. Keep going, Mary.
GUD, is it Stive? GUD Stive must be Strive to provide some kind of water tool to farm or some urban area.
That's Leo, we know. We've heard about that. That's also interesting. And it looks like they manufacture, we wasn't quite clear, but it looks like they make the pumps, or do they just distribute them? Wasn't quite clear about that. But anyway, keep going, Maria.
We've got another firm on sports apparel and underwear. The company also offers footwear, bags and eyewear. So, personal apparel. Another company develops and sells gearboxes, so automotive parts. We've got a healthcare services company. My company is called Lilands, which is a menswear company and based in Hong Kong. And that's all the responses I've got.
Yeah, they've got a few political risks, that company in Hong Kong at the moment. That's great. You can see people have got a bit of a feel for it, but you can see how when I started to probe a little bit, sometimes you can get people can be quite vague about. So be as specific as you can. Understand what your firm does, doesn't do, where it does it, what industries. Get a bit of a feel for it quite specifically, because you'll need that. That'll be if you're a bit vague and say, does it make pumps or just distribute them? These will be quite important things as you're trying to forecast, and its locations and so forth. But it's a very interesting group of companies. As we look at our accounting, because all our companies, we only take companies from countries that use international accounting standards. So they're all using the same accounting standards. But the regulation, this is something that we studied earlier in earlier subjects, but the regulation of the international accounting standards is done by each country. So Australia has its regulatory structure and so forth. And so as you've looked at different countries and their accounts, you can see they're using the same accounting rules, but you can see how there are some differences. Differences in how they label things, some of the information that they're providing because of the different regulations. So the accounting standards are implemented in a slightly different way in different countries. However, if we understand how we account for things like property, plant and equipment or whatever it is, it's the same way across all these countries of the world. There's 3 main countries. There's a number of countries that don't use it. America is the main one. There's a couple other main ones, but the rest of the world pretty well is using international accounting standards. Over 100 countries. So that's one thing to be clear on, what our business does, and that's one of the things we've been identifying in the first half and spend a little bit of time just firming that up. The second thing is to discern its strategy. So that's something that we learned, I think it's week 2. We looked at what a strategy is and how do we tell what our strategy of our firm is. Ryman Healthcare has had a very clear strategy and it's stuck pretty well to it over the last 20 years that it's been listed, and it's 35 years of life. It's been pretty consistent. But that brings us to the next question. How would you describe your firm's strategy? What's your firm's strategy? What do you discern your firm's strategy to be? What is it seeking to do? We've got 4 responses. I bet one of those responses is Yvette. She's probably been answering questions a little bit ahead. But Yvette, you need to give a bit more thought to exactly what your firm's doing, you know, and its activities, and just spend a little bit of time reading up on that a bit more. So we've got 4 responses. What is your firm's strategy? How would you describe it? Got 5 responses, 5 more to go. Got 6. We saw that when we looked at capital markets, just keep them coming in, we saw that when it's different to a fish market where you're buying a piece of fish, you see it, you consume it quickly, what you get, you buy it, you're getting what you're seeing, you know. But when you're buying a share, for example, a company or being a firm, it's all about expectations of the future. So people are trading in their expectations. Because like Ryman Healthcare, it's done about 50 times the money. If you invested in the float 20 years ago, if you put $20,000 in at the float, it's worth $1 million today. It's done about 50 times the money. But that's irrelevant in terms of its value going forward. That's a trip that the investors have already had. It's what you're buying. If you buy a share in Ryman's today, you don't participate in any of that went over the last 20 years. You only participate in what's happening in the future. It's the same when it floated back in 1999. You didn't participate in its previous 15 years of life. You only participated in it since it floated. So we're buying expectations. So how do we, and a key part of understanding, of developing our expectations of the firm is to understand what a firm's strategy is. What is it seeking to do going forward? And what has its strategy been? How good it has been in following its strategy. Is it chopping and changing? Is it sort of all over the place? What is it? Oh, Maria, would you like to take us through while we're waiting on a few more? We've got 7. We're waiting on 3 more. Do you want to take us? Oh, actually, Sarah, why don't you? What's your one? Sarah, what's the strategy of your firm?
So my firm's strategy is basically, I would describe it as being focused on perspective. Since the firm's aiming to be the top airliner in Europe, which is not really something one can classify in quantitative factors. I mean, you can say maybe they're the top airline if they have the most flights or they have the most passengers, but more likely it's classified as they get the best reviews or they have the best safety ratings. Those sorts of things, particularly now when safety's been such an important thing after the couple of plane crashes we had recently where the planes up and disappeared. And so the idea of they're developing to be the best airline in Europe is on the idea of the perspective perspective had by the managers on whether they think they would be classified as the best on the basis of what their customers want from an airline service at the moment.
All right, so you're saying Air France, KLM, they want to be the best or top airline in Europe, and then you're commenting on how a little bit unclear what that means. But who cares whether they're the top airline in Europe or not? Why does that matter?
Well, I would assume that the goal is to be the top airline because they think that will get them more customers, which will improve the overall earnings or profit of the firm, as well as give them better credibility in business if they've got good safety ratings or good reviews from service users.
Yeah, so they might want high load factors on their aeroplanes because airlines have huge fixed costs. It's called high operational risk. I hate companies like this. Ryman's also has a lot of fixed assets too, but its situation's slightly different. But it's so, you know, they make money if they fill the back row of the airline plane. You know, if they fill up the plane, great. But if the back row's empty, they lose money, sort of thing. That's why the A380, you know, Air France is phasing out the A380 because they can't fill them. And it's easier to fill a smaller plane. So perhaps high load factors might be one of the factors. Also, they'd want to, you know, in terms of being a top airline, it will help them fill the planes. They probably have some strategies around whether they're going to be a hub and spoke, a bit like, you know, Emirates. It runs out of Dubai. It has like 120 A380s. Like nobody goes anywhere near that. You know, they've got pretty well all the A380s of the world, and other people might have 10 or something, and they're phasing them out. But yeah, because they've got a hub and spoke, so they can fill these dirty big planes, and then everything feeds into Dubai, sort of thing, and they chug them off to London and sort of stuff. But your firm's strategy might be a bit different. It might be wanting to fly between more routes directly with smaller planes. Is it mainly focused on Europe? Is it the world? What is it? And so airlines do have to keep their planes full. And then there's margins. You know, fuel is a big part of the cost, and labour is pretty big. So you can see how they might be, what being the best airline in Europe or the top airline might mean, because, you know, as a shareholder, you don't really care about stuff like that. I don't care if Ryman Healthcare is the top retirement, whatever that means. But I'm very interested in if it's getting some good returns, you know, particularly its return on net operating assets and its economic profit and a sustainable business model, you know. So, and being a top airline, having a niche, a strong niche somewhere can make their business much more sustainable. But, you know, anyway, that's interesting. Sarah, do you want to take us through some of the others? Can you read those?
I can't read them on my screen. They're too small.
They're too small. All right. Maria, do you want to take us through them?
Sure, I can see them on one. Okay, so we've got growth in the coming years through leasing and purchasing more planes, as well as building and expanding with other subsidiary airlines, as well as hopefully having higher safety regulations. That's Hannah's company.
Is that Aeroflot, is it?
Yeah, they seem to be madly trying to grow stuff as we've been looking in her annual reports, and we're kind of like, well, maybe instead of growth, you need to be looking at operations. But anyway.
That's good. So the growth, you see, so they've got growth in there, and we'll be looking at those sort of issues in the next couple of weeks. Growth in sales, perhaps. Growth in net operating assets, you know.
Yeah. Growth, well, they're looking more to expand their fleet, so I'm saying they're trying to grow their NOA, their net operating assets.
And in sales, probably, too. So we'll see how they feed into, you know, value creation in the next few weeks. So you'll see a number of who are focused on growth, no doubt, and so Aeroflot's focused on growth.
Seems to be, anyway, from what we read in their reports.
And it sees that improving its safety record might help with that. Sort of All right, what's the next one, Maria?
The next one is looking to make China a prime buyer of their product by looking into electric vehicles. That's interesting. And then we've got a strategy to...
Oh, which company is that? Which company is that? Is that Brilliant Car thing or no?
Brilliant. I'm not sure.
We don't have car manufacturers other than that, I don't think.
Just looking for the previous one. Yeah, it must be...
That's it, fine one. That's Flat Chrysler Automotive.
Okay. It's just... And where are they based?
Italy.
In where?
Italy.
And they're getting into EVs?
They're looking into seeing how their last CEO suddenly passed away and had to step down. The new person's looking into SUVs and they're trying to get into the China market, but a lot of the market in China won't touch petrol or diesel that much. They want to hit electric, so they're looking at more into their research and development to try and get electric cars to be more affordable for them to try and sell, to try and make them one of their prime markets.
Oh, I see. And because China's got all that pollution problems in the capital city, everywhere actually. So if they can have more electric cars, but you can see somebody like Tesla is getting right in there. It's you can see how Tesla's strategy is so strong. They started from scratch, whereas all these other manufacturers are trying to turn their own cars into electric ones. It's an interesting. So anyway, there's that electric thing for growth into China, but they obviously got strategies for something else. Do they sell cars in Europe?
Yeah, they sell cars all over, seeing how it's like they've got Alfa Romeo, Flat, Chryslers. There's like a whole heap of other brands they've got, but their main strategy from like their 2008 is pretty much trying to get electric cars and making China one of their prime buyers. That's their main, or the CEO's current strategy from 2008.
Yeah. So you can see the challenges your firm has got, isn't it? The car manufacturers are concerned too, longer term, that they could get left behind by the rideshare approach, where the idea that everyone won't buy cars like has happened in the past, and increasingly people will share them, and then they'll be electric and autonomous. And so where do the car manufacturers fit into all of that? So that's why a number of them are getting into autonomous and electric. To try and also some of them, like Toyota, are investing in rideshare, Didi and all this stuff. They've also invested in Uber and this sort of stuff. So they're trying to position themselves. So your company, some of their brands are more niche, like Alfa Romeo, those sort of ones, but it's got Chrysler, for goodness sake. So it's making these dirty big SUVs for America, probably. And
yeah, they've got Dodge as well, and
Dodge,
Jeep.
yeah. So they've got all that. So you can see there's strategic challenges they've got. And, it's a tough business in some ways if you think of the strategy over the next 5-10 years. But they're deciding China's such a big market that they're going to try and get, they can see growth in electric vehicles in there, and they're going to seek to do that. Have they made much progress in developing their capacity to build electric vehicles?
Not sure in that sense. I know they're spending a lot of money on research and development that I've actually looked into, like their facilities. They have massive facilities with like different terrains, and they've got all their equipment and stuff, so they can actually sit there and modify on their in their actual facility, so they don't have to transport. So it's like gets tested, gets modified, goes back out, gets tested, and so on. But the biggest issue was that CEO who stepped down only mid-year. He brought the company back from being broke or almost going under 14 years ago. So it was a massive loss when they lost him.
Yes, that's some risks around that. So anyway, they're interesting things to watch. So R&D expenditure, that can be blowing a lot of money for no benefit at times. So you can look at those car manufacturers spending a lot of money on R&D. So it's a very interesting. You're touching on some very interesting issues for your firm, aren't you? And so you can see the view of the value of your firm. You can see how it's driven by. You've got to understand the firm's strategy and your view on it. And you're saying that with a new CEO, there may be some changes to the strategy. Oh, Maria, do you want to keep taking us through?
Yes. Okay. So the next one. I would describe my strategy through the 5 Ps framework as relying on perspective. The firm is aiming to stand out from others in Europe. And oh, no, we got that one. That one we've discussed. That was very good, though, to start with. That's why I had me.
Oh, I like the 5 Ps. That was our structure, wasn't it?
Wow, this is great.
I find it a useful structure to think about strategy, Mintzberg's 5 Ps. Yeah, keep going. We'll go through these quickly now. Just whip through them.
Yep. So the next one is to outperform competitors and be the major supplier worldwide for marine services. That's their ploy. Another company is expanding into their traditional security services division by keeping on top of technology to keep an edge on the competition, as this area is becoming increasingly technologically based. They are currently looking at separating out of the company the cash management division. They operate this service in 44 countries, and with the increasing use of EFT, there will be a gradual decrease in the demand for these services.
That's interesting, isn't it? That is. It's sort of like postage. You know, it's all going to get reduced because people aren't using money so much. Yeah, keep going. Just quickly through. We need to move on up this.
Yep. My firm is focusing on building brand image by using the latest innovations and technology and providing superior customer service for air travel. We've got Carraro, which is technological innovation, people, and a flair for improvement. And the final one I've got is a strategy to provide consumers with the products with the best sense of quality, design and fashion, and maximum performance cost, which in order to become a leading enterprise to show Chinese menswear brand image to the world.
Yeah, some of these can sound like motherhood a little bit too, sometimes like that, can't they? But that's good. So anyway, you can get a feeling for where people are at and growth and other things. And we'll keep moving on.
Yeah, that was it, Martin. Sorry.
Now, we'll move on to let's run through some of the slides too. How would you describe what economic profit is? 1 minute, just write down what you think economic profit is. I think economic profit is, or whatever you want to say. What's economic profit? What do you think it is? It's one of the frameworks we're looking at. We'll be looking at the DCF, discounted cash flow framework, and we'll also be using the economic profit framework. A real focus of our next 6 weeks is going to be the economic profit framework. And so what is economic profit? Ryman Healthcare has made so much economic profit the last 20 years. I've got one response. What's the first one, Maria?
I've got ROE. Return
on equity. Yeah, it's not quite the concept of economic profit, but we've sort of return on equity. What else have we got? Just read them out, Maria, as they come in.
Yep, so we have economic profit is the framework that looks at what a firm gains from its operations and income above what it puts in as cost for operations in the form of cost of capital while accounting for the expenses of operations.
That's quite good. Yeah, keep going.
The ability to achieve abnormal earnings, providing returns above the cost of capital.
Very
abnormal
good.
profits. It's the difference between revenue received from the sale of an output and the cost of all inputs used and opportunity costs.
Yeah, that's good.
We've got a formula, RNOA minus cost of capital times NOA. That's how we calculate it.
They're good. Keep them coming in. And so that's one of the things we looked at is economic profit. we've been talking about it as being abnormal earnings as is one of the measures of economic profit. That's return on equity less the cost of equity capital. That's ROE minus 1, all times the book value of equity. So that's one way of measuring. We're going to be shifting to looking at the operations, but that economic profit in terms of the company itself. And we looked at how return on equity you can view it as return on net operating assets plus FLEV times spread. FLEV is the financial leverage. Spread is the difference between our return on net operating assets and our cost of debt, net financial expenses. So that's our spread. Ryman's has a big spread. Its return on net operating assets is a lot more than it costs for its borrowings. It's net financial expenses. So a little bit of debt goes a long way with Ryman's in ramping up its return on net operating assets to get its return on equity so high. And then, so we can break up the return on equity into return on net operating assets plus FLEV times spread. And we saw that return on net operating assets can also be broken up into profit margin times asset turnover. And the profit margin can be broken up into operating income divided by sales times sales divided by net operating assets. Now, we'll skip through these questions. And for Ryman Healthcare, it has a very high profit margin, 57.1%, partly driven by the way it does its accounting, and a very low asset turnover, 0.25, but it still comes up with a nice, healthy return on net operating assets. Now, we also talked about how we need to connect to reality. We can be looking at the accounting numbers, but nobody cares what the accounting numbers are. What people care about is the business. And so what are the accounting numbers telling us about the business? The accounting numbers can be anything depending on the accounting rules, but what are they telling us? And so we're going to be needing to connect to the economic and business drivers. And I've listed out some of the economic and business drivers for Ryman Healthcare. And so we need to connect those accounting drivers to the economic and business drivers of the past. And then what we'll be doing, building on that, understanding the past, which is what we've been looking at, particularly the last 3 weeks, we're going to be focusing on accounting drivers, return on net operating assets and net operating assets, plus breaking them up a bit, profit margin, asset turnover, sales and sales growth. And some of your firms are talking about wanting to grow certain aspects of their business. So we're going to drill down into those accounting drivers, connect them to the economic and business drivers of our firm. What's driving return on net operating assets, net operating assets? And then we're also going to be starting to look at beyond the forecast horizon. So we're going to be forecasting for 5 years in our unit. But then, once you get beyond what you can comfortably forecast, we're just going to use 5 years, how do we handle value creation beyond that? Now, who's been looking at the videos? Have you been looking at videos much?
Sure.
Yeah, what? Pardon?
When I get a chance.
What's your favourite one?
Oh, at the moment, I've been watching Maria's video on how to separate financial and operating activities.
Yeah,
financial statements.
It's a popular one, that one, isn't it? The videos are here in Moodle. You see, if you go to the videos, the study guide, people are reading the study guide because, they're writing the KCQs. We haven't integrated the videos in the KCQs, but we're planning to over time. And the videos are all there. And you can see how there's these videos that we've been looking for pairwise. There's some on the assignment 1, and you're talking about some of these. How to enter and restate the financial statements, and then how to restate the income statement, restate the balance sheet. It's probably one of these, particularly the income statement one might have been your favourite. and tips on calculating ratios. So there's all the videos that relate to the assignments, and the same is with assignment 2. There's a whole lot of videos here. They're often quite short, except some of Maria's go on for an hour, but they're all good. You can turn them on and off, and you can see how we're looking at some of the key issues there. In addition to that, there are videos for each of the weeks, and you can see that for weeks 4 to 6, there's various videos here. You know how we looked at return on equity and analysed it into leverage, profitability, efficiency? There's sort of great short videos on those. The key accounting drivers down here, the key accounting relationships connect to reality. And so here we go. Okay. Yeah. And so this is one on the key accounting drivers. So I'm just going to, who's seen the one on the key accounting drivers? Have you seen that one, Hannah?
I'm not too sure.
Not too sure. Well, here it is. We'll have a look. If you are wondering what the key accounting drivers of your firm are, this video will look at the key accounting drivers of our firms through the lenses of the discounted cash flow and economic profit frameworks. In the videos analysing return on equity leverage, profitability and efficiency, we saw how we could analyse or break down return on equity into several accounting drivers, ratios that are causing return on equity of our firms to be at the levels they are. Now we can focus on the enterprise, which is on our firm's operating activities, if we think the financial activities of our firm are not adding value. See the video Benefits of Focusing on the Enterprise. This means we can focus on return on net operating assets and on its drivers of profit margin and asset turnover, and in turn on the drivers of profit margin, operating income and sales, and asset turnover, sales and net operating assets. We know free cash flow equals operating income minus change in net operating assets. And we know that economic profit is driven by the book value of equity, as well as by the present value of abnormal earnings. Key accounting drivers of our firms that we can focus on are return on net operating assets, profit margin, asset turnover, sales and sales growth, and net operating assets. These accounting drivers are not themselves driving the value of our firm, but like all accounting numbers, are simply passengers on the journey of our firm and its equity investors and other stakeholders. Why focus on these key accounting drivers? Because by focusing on the key part of a firm's financial statements, these accounting drivers, we can focus our attention on connecting these accounting drivers to the economic and business drivers that are driving these accounting drivers. Connecting the accounting drivers with a firm's economic and business realities is at the heart of financial statement analysis. See the video Connecting to Reality. This is because forecasting a firm's economic and business realities and then connecting these forecasts to a firm's future accounting drivers and financial statements is what financial statement analysis is all about. And it is the quality of our judgments in forecasting a firm's economic and business realities and connecting them to a firm's future accounting drivers that is the basis for a quality valuation of our firms. And it is carefully connecting the past accounting drivers to the past economic and business drivers that is the basis for us to then make our forecasts. Analysing a firm is not simply calculating a few ratios. It is not that simple. And it all requires technical skills and judgments working together. For further information on accounting drivers, go back to Chapter 4, Sections 4.3 and 4.4 in the study guide, and also review Understanding the Past weekly questions. Also answer, write and rate questions on Understanding the Past in Peerwise. All right, so a key content in our unit is in the study guide and also in these short videos. So if you're not connecting to the short videos too much yet, have a look at where they are in the videos section and you can connect to the ones each week and also to the ones relating to the assignment. And so it's basically, so they're the two key sources of content. We obviously deal with some of the content in the lectures as well, but it's just drawing on these aspects that are in there. And then what we're doing in class, and we'll be doing, obviously keep doing quite a bit more of that, is we're focusing on supporting you in the assignments. Now, we'll come to our last two questions. What was the most important thing you learned today, and what questions still remain unanswered? You've got 1 minute. 1 minute. Forty seconds. Ten seconds. What was the most important thing you learned today? We've got 8, 2 more to go. Maria, do you want to take us through these?
Certainly. So we've got the most important thing being learnt today was that there's a different way to view the operations of my firm to relate that to the overall goal of my firm. Very good. That I need to dig deeper into my company. We've had more information about accounting drivers. The accounting drivers. What are they?
Well, sorry, just to break it, the need to dig deeper in my company, that's a really good takeout from today. Because quite a few people are a little bit vague about what their firm does. If you're not clear what they're doing, where they're doing, then you're going to find it really hard the second half of the unit. So spending a little bit more time digging into that, being a bit clearer, read up a little bit about it, is a really good idea. Sorry, Maria.
No, that's good. I was going to ask for the comment about more information about accounting drivers, and I was just going to ask, what are the accounting drivers? But there might be a bit varied and far too many. I don't know.
Well, what about the video? We just saw a quick video. What were the accounting drivers in the video? Sharon, what do you reckon? Pull one out. Remember, they popped up in circles. Does anyone want to jump in? What was that video is on accounting drivers. So you can see how you can look up the videos and just click on it. And you know, I only showed that just to give you a feeling for the fact that these videos exist and that they're there. But the accounting drivers, these are what we're going to focus on with our business. So what were some in the video? Does anyone want to throw in? Sarah, what do you want to throw any in?
Profit margin.
Beg your pardon?
Said profit margin.
Profit margin, yep. PM, profit margin was one of them.
Asset turnover.
Asset turnover was another. Anybody else? Justin, you'll be able to throw one in Cairns. Got some more.
Return on equity.
Yeah, and we're focusing on return on net operating assets now. We'll be focusing on that. So return on net operating assets, we're going to shift our focus to the operations. But that's right. return on net operating assets is one of the drivers of return on equity. Return on equity equals return on net operating assets plus FLEV times spread. If we think that the financing operations don't add value, the FLEV and the spread isn't adding value, then let's forget about all that stuff and focus in on the operations, return on net operating assets. So return on net operating assets equals profit margin and asset turnover. So there's 3 drivers. What else did we have? What about Hannah and Mackay?
NOA.
NOA, net operating assets, that's right. That's a key, the growth in net operating assets is a key driver of value for Ryman's. It's building $500 million worth of new retirement villages on which it's making good margin each year. So if you can grow, good margin, if you can grow your net operating assets in the context of earning good margins on it, that's great. We're going to look at good and bad growth too. There's a video on that in a few weeks. That's good. What else? Anyone want to throw any more in?
Sales?
Sales. Who's heard about sales? And particularly sales growth. Have you heard about that? I bet some of your firms are talking about growing their sales, And one of them wants to grow their sales of electric vehicles in China. So we're going to look at sales and sales growth, particularly this really good video on good and bad sales growth. Like, is all sales growth good? And if there's good and bad sales growth, how do we tell the difference? So there's some. So they're the key accounting drivers. They're all in the video, and they're what we'll be focusing on. So we're going to drive down through what those accounting drivers are for our firm in the past and what's been causing them. Sorry, Maria, you want to go back?
Yeah. Okay, so we've got that the strategies used by different companies vary about as much as the imagination.
That's right. And if you go back with your firms year after year, sometimes not that uncommon to find their strategy keeps changing every year. Highly successful companies, they stick to their strategy generally. Ryman's has stuck to its strategy for 20 years, 35 years really. But yeah, they keep changing it. So what sort of a strategy is that if they keep changing it every year? But keep going.
And actually the remaining comments all about we need to know the strategy of our firms because that can be the that helps us to understand the drivers of our company, making sure that you know the strategy of the company and what and where they sell their product, using the 5 Ps to guide you to understand your company's strategy, and then connecting the strategy to the firm's financial future. So that's very good insights about the strategy of a company and its importance and the consequence of knowing that strategy in relation to its future operations. And the last one I have is that it was great to review the knowledge we've learned before and that we should find more information about our company. So that linking it back to the other comment that we need to dig deeper into our companies.
Now, they're all really good. That's great. So that's basically what we've been doing, building that review for the second half, because it all gets exciting now as we go to the second half. Do you want to go through what questions still remain unanswered? We've got about a minute, Maria. So do you want to take us through these?
So we've got nothing. How are we going to forecast the future of our firm, which we'll be looking at in subsequent weeks? I'm wondering whether I will be comfortable relying on my judgments to value my company. And do we need to do a Word document for step 7 and step 4 in the assignment? So do you want to quickly answer those, Martin? Just really about...
Step 7 and 4.
Yeah.
Are they KCQs, are they?
I think so.
Step 7 and 4? Yeah, Word documents, yeah. But when you submit, whichever one it is on Monday, just submit one Word document and one spreadsheet. That's easier for us to mark. It's not the end of the world if you put in multiple Word documents, but it's just make our lives easier. A happy marker, it doesn't do you any harm, So we ask for it in the assignment, one Word document, one Excel file. But yeah, I think that answers that question. But if not, you might like to raise it again. We're just running out of time, so we'll have to discuss things in our own places. Right, so that's what we're... Sorry?
It will be comfortable to rely on my judgments to value a company. Well, hopefully you will be once you work through the content. Will you be more comfortable?
Well, these are things you can reflect on. We're going to be talking about some of these questions